Hello everyone. Last Friday in the aftermarket hours, Ministry of Statistics released the industrial production growth data for November month. It is a very important macroeconomic indicator for analyzing what we can expect in the upcoming Q3 earnings. So let's discuss this in detail first and then we can move on to a regular pre-market report for today 13th January 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Just for info, already on 13th December pre-market video, we discussed about the October month industrial production growth data. So this November month data is the continuation for the Q3 earnings. On the top line, it grown by 5.2% year-over-year basis, which is the 6-month high value, and also it's above the analyst expectation and higher than the October month 3.7%, which was higher than the September month 3.1%. So top line, it's an unexpected very good macro data. Anybody want to read the full report, please have a go. I will attach the link in the pinned comment. If required, please pause and have a look. As an immediate subsector, they classify these into 3 sectors: mining, manufacturing and electricity. Here clearly manufacturing is doing better than other sectors. Then please look at the electricity slope. Between August to October, it was underperforming, but on the November month, it was improving. So only mining was not doing good. Manufacturing and electricity was okay. Can we consider whole manufacturing sector was good? No, we can't. I think the following subdivisions such as infrastructure, consumer durables, textile, automotive and electrical companies grown good, posted a decent growth. On the other hand, consumer non-durables, in the narrow sense nothing but FMCG, it grown only by 0.6%. Then food product manufacturing, leather product and other small manufacturing declined significantly. So I would say these sectors not good. Finally, on the neutral side, pharma, petroleum product and tobacco grown above April to October period, but according to me not the significant growth, so I would consider this as neutral. Here please note whatever I said positive and negative sectors were connections to the IIP report, not the direct stock price prediction. Either way, because of this industrial production growth data, we can expect a respective sector will be on focus. Then coming to US, on Friday before their market opening, US Bureau of Labor Statistics released the report about non-farm payroll data, unemployment data and average hourly earnings increase on month-on-month basis. First, non-farm payroll data. For December month, it came as 2,56,000 new job addition, which was significantly above the expectation 1,67,000 and also significantly above the November month data. In addition to that, the unemployment rate came as 4.1% and the average hourly earnings on month-on-month basis increased 0.3%, which all very strong jobs data and very good macroeconomic data. But from the stock market perspective, now this reduced the prospect of Fed cutting the interest rate on the coming March month significantly. Like earlier, before the data release, there was a 50% probability that Fed might cut the interest rate in March month. That now dropped to below 25%. And according to Fed monitoring tool, 75% chance Fed might pause the interest rate. All these made all 3 US major index very negative. At the end of last Friday, Dow Jones decreased by 1.63%, S&P went down by 1.54% and Nasdaq was also down by 1.6%. Regarding VIX, it increased from 18 to around 19.5. Then coming to Indian ADR, both the banking stocks decreased substantially more than Indian market. However, despite the negative US market, maybe because of TCS quarterly results, IT stocks closed mixed. If we calculate the arbitrage, both banks indicating further negative above 1.5%. Overall, banks ADR not looking good. About Gift Nifty, on Saturday morning, it dropped further to 23,329, equating that to our spot market. For now, it shows that Nifty to open gap down of over 150 points. The status may change as time progresses, but for now, this is the current state. As a summary, global momentum deteriorated further. Friday's very good US jobs data reduced the interest rate cut optimism, and that negativity was reflected on the Gift Nifty as well as on the banking Indian ADR, but not on the IT stocks. One more thing, on Friday, RBI released bi-weekly banks deposit growth rate and loan growth rate. Again, both of them decreased, especially deposit growth rate dropped below 10%. Please remember this, as far as I know, still SBI, ICICI Bank and Axis Bank haven't released their Q3 business update and I'm not sure about its timing. So if the release is during market time on any trading day, that might influence the market. So please keep tab on it. About institution, no surprise, on Friday too, FI was net sellers. They net sold for 2,250 crore rupees. Then DA net bought the shares for near 4,000 crore rupees. Just for info, Reliance, Infosys, HCL Tech and Axis Bank etc. around near 32% Nifty weightage stock is going to release their Q3 earnings this week. So we can say it's a make or break week for the next 4 weeks. Moving on, as per stock open interest, Paytm, KPIT Tech, DMart, JSW Energy, Oracle FinServe and REC Limited got an increase in open interest along with a negative close, indicates the short build up. On the other hand, AU Small Finance Bank, TCS, Marico, Bajaj Finserve, UBL and HCL Tech got an increase in open interest with a positive price close, which means these stocks got the long build up. Then about the things to look out, today early morning lot of Chinese macro is due. Then there is nothing that I'm aware of is scheduled release during our market hours, but at 4 p.m. India's consumer inflation for December month is scheduled to release. At present, analysts expect it to be around 5.28%, slightly less than November month data. Anyway, as I said, which will be due after the market hours, so we can see the influence tomorrow. But because it's a government release data, please be careful. It might create volatility in the afternoon. Then for US, New York Fed 1-year inflation expectation are some of the things we need to keep an eye out today. Coming to technical, last Friday Nifty opened 30 points gap up and tried to move about 23,600, but the banking stocks negativity pushed it down and closed below 23,500. Thus on the daily chart, Nifty formed a bearish candlestick pattern and continued its lower high formation for the 6th consecutive session. In addition, it's still trading below all key moving averages, including the crucial 200-day exponential moving average, and also remaining in the lower Bollinger Band, all indicating the persistent negative sentiment. Hence, if Friday's low 23,350 is broken, then the next support will be November low 23,263 followed by 23,000, which is very important support from psychological front. Then on the upside, the 23,600 to 23,700 range, Friday's high and 200 exponential moving average is the key zone to get back. In case of Bank Nifty, it opened 80 points gap down and dropped and closed below 49,000 mark. Thus on the daily chart, Bank Nifty formed a long bearish candlestick pattern after decisively breaking down its support trend line. However, technically RSI momentum indicator entered the oversold zone, so there is a possibility of a bounce back. Hence, if 49,600 level is surpassed, it might bounce back to the 50,000 to 50,200 range. Conversely, as long as Bank Nifty trades below 49,600, weak sentiment is likely to continue. On the downside, 48,300 and 48,000 are key support zones. As per the weekly options data, the maximum call option open interest was at 24,500 strike, followed by 24,000 and 23,800 with maximum new call option rating at 24,000 strike, and then 23,800 and 23,500. On the put side, the maximum open interest was at 22,500 strike, followed by 23,000 and 23,500 with maximum new put option rating at 23,400 strike, and then 23,000 and 23,500. Thus, from options data, Nifty might see support at 23,000 and resistance at 23,800 in the near term. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.